Have you ever wondered how businesses today manage complex financial tasks so efficiently, while traditional methods often took days, or even weeks? The secret lies in automation. In today's video, we're going to explore how automation is not only changing the way accounting is done but also transforming the accuracy and power of financial forecasting. Whether you're a business owner, aspiring accountant, or someone curious about the future of finance, this video will give you the complete picture of this technological revolution. The old way of accounting, slow, manual, and risky. Let's rewind a bit. In the past, accounting was largely manual. Accountants had to sort through boxes of receipts, manually input data into spreadsheets, and reconcile transactions line by line. This process was incredibly time-consuming, prone to human error, and stressful during tax season or audits. Forecasting future revenues or expenses was equally challenging, often based on outdated reports or rough estimates. In short, traditional accounting lacked real-time insights and flexibility, and it often left businesses playing catch-up rather than staying ahead. What is accounting automation? Now, let's talk about what accounting automation actually is. In simple terms, automation in accounting means using software, artificial intelligence, AI, and machine learning to handle repetitive and rule-based financial tasks. These tasks include data entry, bank reconciliations, invoicing, payroll processing, expense tracking, and even generating financial reports. With automation, these processes are streamlined, faster, more accurate, and can run 24/7 without the need for constant human intervention. How AI and machine learning are transforming the game. Artificial intelligence is not just about doing things faster, it's about doing them smarter. AI-powered accounting software learns from historical data, recognizes patterns, and can predict future outcomes. For example, AI can detect irregular transactions, suggest budgeting improvements, and even highlight financial risks before they become major issues. In forecasting, machine learning algorithms analyze historical financial data, seasonal trends, and customer behavior to predict future sales, expenses, and cash flow with far greater accuracy than traditional methods. Real-time accounting. Say goodbye to month-end chaos. One of the biggest game changers is real-time accounting. Thanks to cloud-based systems and API integrations, businesses no longer need to wait until the end of the month to see how they're doing financially. Transactions from bank accounts, credit cards, and other platforms are automatically synced in real time into the accounting system. Business owners and finance teams can view live dashboards that show exactly where the money is coming from and where it's going, at any moment of the day. This improves cash flow management, budgeting, and decision-making across the board. Forecasting with confidence, the new standard. Forecasting used to be a best-guess scenario, especially for small businesses. But now, forecasting tools embedded in platforms like QuickBooks, Xero, Oracle, and others can analyze large sets of data and generate future financial projections with minimal input. These tools consider everything from sales trends and vendor schedules to economic indicators and inventory levels. The result? More accurate budgeting, better inventory planning, and smarter investment decisions. Automation in compliance and tax reporting. Let's talk about compliance, something every business dreads. Automation makes it easier to stay compliant with financial regulations, whether local or international. Automated systems can track tax rates, calculate liabilities, generate reports, and even file returns with regulatory authorities. Businesses that used to spend weeks preparing for audits can now simply grant auditors access to a secure dashboard where everything is organized, time-stamped, and verified by the system. This reduces errors and improves transparency, all while saving time and money. Enhancing accuracy and reducing fraud. Manual accounting often leaves room for costly errors and sometimes even fraud. But with automated systems, every transaction is recorded and verified with digital trails, timestamps, and security checks. AI tools can detect unusual activities in real time, like duplicate invoices, unauthorized expenses, or suspicious vendor behavior, and alert the finance team immediately. This creates a safer and more accountable financial environment. The evolving role of accountants. Now, a big question, are accountants becoming obsolete because of automation? Not at all. In fact, the role of accountants is becoming more valuable. Instead of spending hours entering data or preparing ledgers, accountants are now acting as strategic advisors. They interpret financial data, guide budgeting and forecasting, assess business risk, and help drive growth. In other words, automation is not replacing accountants, it's elevating them to focus on analysis, strategy, and decision-making. Integrating with business systems for better insights. Modern accounting automation tools don't work in isolation, they integrate seamlessly with other business systems like customer relationship management, CRM, enterprise resource planning, ERP, inventory management, payroll, and banking apps. This creates a single source of truth for all financial data. The result is more accurate reporting, better cross-department coordination, and a clearer financial picture for the whole organization. Time and cost savings that scale. One of the biggest advantages of automation is cost and time savings. Businesses no longer need to hire large finance teams for data entry, spend days reconciling books, or outsource basic tasks. Even small businesses with limited staff can manage their finances efficiently using automation tools. And as the business grows, automation scales with it, processing thousands of transactions a day without a drop in speed or accuracy. Case studies: real businesses using automation. Let's look at a few examples. Netflix uses automation to monitor its global content spending in real time. Amazon relies on predictive analytics to manage pricing, logistics, and cash flow. On the small business side, companies using tools like FreshBooks or Zoho Books report up to 40% savings on administrative costs simply by automating invoicing, payments, and financial reports. The future, where automation is heading next. We're only scratching the surface of what's possible. The future of accounting will likely include more voice-controlled features, natural language financial queries, advanced blockchain-based auditing systems, and even AI-generated financial strategies. Imagine asking your software, "How much can I safely invest next quarter?" and getting a data-backed answer in seconds. That's where we're heading. Final thoughts: are you ready for the shift? The shift toward automation in accounting and forecasting is no longer optional, it's essential. Businesses that embrace this transformation can stay ahead of the competition, make better decisions, and operate with agility in a fast-changing economic environment. Whether you're a finance professional or a business owner, now is the time to upskill, adapt, and leverage automation to your advantage. If you found this video helpful, please give it a thumbs up, subscribe to the channel for more finance and business content. Drop your experiences and questions in the comments below. Thanks for watching, and until next time, stay smart, stay automated, and stay ahead.